What's up, everybody? Real Trader Joe back here with the market close today, August 7th, 2024, and what a sell-off we've had. This morning at the market open, we were rallying pretty heavily, and now the Qs have actually turned negative. So, if we just take a look here, maybe we, change the time frame here, week to date, gives us a little bit more vision into the way the week has gone. We got all the way up to 449 over the space of today, and now we're down, well below the open, and the opening 446, 438. So quite an interesting reversal and almost a bearish engulf. Not quite. It would have to reach down to the the opening price of the previous day to be a bearish engulf. So happy to see that, but again, as I mentioned in the morning open, this is why we've got the... Actually, let me do one quick thing. Let me make sure you guys can actually hear me before I go any further, because I made that mistake this morning. You can fuck up in different ways. Just don't make the same mistake twice. Okay, nice. So the mic is actually getting picked up. Cool. So, some trade adjustments. This one is going to be a little weird, but I actually rolled our 200 Tesla put, in the October cycle, just way out there to December 18th, 2026. And the reason I actually did this, because this seems counterintuitive to a lot of people. But if you take a look at, let's actually just try to put on our previous position. So we had the 200 put for the October cycle, and we bought that back and we sold the December 18th 135. So let me just put that on the screen right here. So we had the 200 and we sold the 135. Okay. So here you can actually see we're losing quite a chunk of theta here. We're losing 10 theta a day, which is a lot. I mean, that's not insignificant. But in exchange, we're getting 30 short deltas, and we're picking up 900 extrinsic value. So even though we're losing theta, we're losing the decay of that extrinsic value. We are still picking up extrinsic value. We're getting a much better price from which we'd be obligated to buy Tesla, and we're neutralizing some of our directional risks. So now we are pretty much directionally neutral despite the massive move that Tesla's actually had. And the interesting thing about this is because the short call option is in the 45-day cycle, we are going to allow ourselves more and more profitability as Tesla rallies. So check this out. Ignore this 863 days for a minute and just look at what happens to the profit graph 2 weeks from now. Right, because that short call is in the 45 DTE cycle, we are still actually building in bullish momentum to the trade as the time span progresses. So if we just go another 2 weeks, let's just say September 5th, so about a month from now, we're actually going to be long 14 shares of Tesla. Tesla just froze and stayed right where it is. We're actually going to be gaining deltas. And the reason for that is because as this short call ticks down to expiration, it's going to lose delta. It's going to lose potency. So we are actually going to gradually get longer on Tesla. And so we still get the bullish bias we're looking for. We have neutralized bullish exposure in the meantime. And we've also given ourselves more room to run. So, as this short call ticks down and eventually expires, we will be able to harness the benefits of a short put in Tesla, and we'll be able to do so pretty much unaffected by any downward moves in the interim. I mean, 9 delta, we're still, long 9 shares, but I'd say all that is worth the theta decay. So what did we give up? We gave up theta, we gave up daily decay, we gave up daily capture of extrinsic value, and in exchange for that, in exchange for giving up that theta decay, we've neutralized our deltas, we've allowed ourselves a much better break-even price for the stock, and as time progresses, we've allowed ourselves to benefit from, the gradual upward momentum of stocks. So now, if Tesla, plummets we're in a much better position. The other thing I'll say about this trade, and then we'll move on, is that our buying power requirements much easier on the eyes here. You guys may or may not be able to see that. I guess I'll know here in a minute, but yeah, so the buying power requirement, you know, it went down significantly. We saved ourselves $4,000 or $5,000 in buying power. Still very allocated at 57% of our capital. Yeah, it's evident to me that you guys are not actually able to see that there. Okay, so that's just maybe something with the platform I have to mess around with, but in any case, you know, I'll take more capital. I'll take capital reclamation. I'll take neutralizing directional risk. I will definitely take the benefits of a short put in the long term, and all for the low cost of 10 daily theta, which, you know, that's fine. I mean, if you think about where our original option was in the October cycle anyway, so we were already 72 days out, approaching leap territory. Since we have a foot in both camps, basically, you know, at 72 days, you're not exactly at that 45-day theta curve, and you're not exactly at the 90 days, 120 days regarded for leap options. So I just figured, all right, we'll just go ahead and neutralize directional risk. We'll reclaim some buying power. We will afford ourselves the opportunity to allow Tesla to continue to plummet if it so chooses. And hey, if it rallies, then all we have to do is just wait, right? Because our 135 put is definitely going to still have some delta, and our 250 call that's short is, you know, going to be losing delta here pretty quickly. The other thing I'll say is that if Tesla rallies, the rest of our portfolio is likely going to be very happy. I can imagine AMD, Palo Alto, Amazon, all those guys are probably going to get involved. Now on to the ugly part of the day. Dell. God damn it. It's never easy. Yeah, Dell's just tanking. Week to date, let's just, you know, zoom out. I know I went over this morning, but yeah, look at that. 140, almost 50% over the space of about a month, you know. Approximately, not exactly. I mean, it'd be 160 would be 50%, but still, yeah, what a drop. And this may just continue, you know, so who knows. Obviously not good to be bearish Dell today. It's where the majority of my losses are coming from. On the plus side, you know, ARM and QQQ, they were negative this morning. They're positive now. My delta's still bullish. We're still continuing to get bullish deltas from the rest of our portfolio. Something to watch tomorrow. VST earnings before the bell, so we are going to know real fast how this trade is doing. We're long VST right now, but it's not going to take very much. I mean, we're going to be short at, you know, $5 thereabout. So if we just go to the expected move for tomorrow, the expected move for tomorrow is about $5 or $6. Actually, a little more like 6.5. But I guess that's okay, right? Because if we have at 6.5, we're pretty much delta neutral, and we've gained some of our money back. Not to mention, you know, the volatility. Oh, whoops. Yeah, okay, that's why I had that on September. So yeah, I mean, at 6.5, we're still gonna lose. We're gonna lose a little bit of money, but yeah, we're gonna be short about 15 deltas. So I don't think it's a bad thing to be long here. Stocks will go up over time. We have 72 days in the cycle. I'm thinking about just closing out of that altogether or rolling it even farther. If we rolled it to 135, we'd be able to really widen out and maybe fade some of this earnings movement. So that's a $15 wide inversion, and that would be, well, yeah, we'd have well over $15 here. Here's a crazy idea. What if we... How far can we roll this guy? And this is just me experimenting. A lot of the times I'll do this with positions that are not going my way. Okay, interesting. So yeah, we could do this, where we're rolling way out in time. Got the 72.5 put. This is an out of the money trade, so we're uninverting our strangle here. Yeah, this seems okay. 7 theta. The only problem though is that of course we are uninverting, and of course we're sacrificing the theta decay. So I'm gonna sit tight. This arguably could be a mistake, but we're right on the verge of having VST come back to us. We're going to get some benefit out of the IV rank decrease from the earnings tomorrow. A $10 rally would be really unfortunate given the history of this trade at 87.5, but it still would not be the end of the world for us. So, you know, there's a part of me that says I can close. If I close this out, yeah, see, if I close it out, I don't really get that much in buying power. To me, it's worth keeping $1,400 to, you know, try to not make back, but at least break even on 1,000. So, you know, plenty of time decay here at 10 theta a day. You know, in 10 days, that's 100 extrinsic value. And if we actually take a look at the extrinsic value left in this trade, we have about 1,000 extrinsic value left. So, you know, very possible that if we get to 0 extrinsic value, that we'll be able to break even on this trade. If not profit from it with the 186 extra that we have here. So, we are going to sit tight and do nothing. Obviously, worst case scenario tomorrow being that the trade continues to go against us. Hopefully, actually, in my opinion, to the downside, because we can rely on positive drift to get us back up. But, you know, my big fear is that we get whipsawed to the upside. VST goes to like 100, and now we're stuck with a 75 strike short call and an 85 put that's out of the money. So we will see what happens. But that is one we are just going to have to pray does not go against us too heavily. Let's see. The Tesla short call continuing to do some work here. CrowdStrike finally going negative with the rest of the market. That's okay. We got plenty of room there. I'm okay if the market just sits where it is. You know, NASDAQ down 0.5%, so not insignificant. ES down about 1/3% as well. So some more people, I guess, just deciding, hey, we're going to continue to sell off. This 94.102 inverted strangle on XBI also playing a role in our deltas here, but of course the majority of them are in stocks that are green today, which is helpful. We have Palo Alto basically holding down the flagship here while the rest of the boat sinks. And then AMD, you know, just chugging along at 130. We've got the 165 I talked about earlier. And things are looking good. So I am very happy with how this is turning out. My camera quality, though, not the best. Kind of wonder what's going on with that. Is it my internet speed? May just be the broadcast. Maybe I'll change the bitrate on that. I know I've got the internet plan to handle it. So I'm thinking about trades that I could put on. Let's see. So these are all my adjustments. VST I did about 8 days ago. ARM and QQQ are new trades that are winners right now. Micron is, you know, has that new strangle I put on it. AMD is a new trade, or at least this aspect of it is new. CrowdStrike, the roll that I did, is a new trade. Amazon is a new trade. And then the Dell Strangle with the rolls that I've already done, also new. So, yeah, I'm not Dell is definitely a pain point right now. I mean, if we just look at the order chain, I've scaled here. A rally to 100 would be fantastic. We'd get some of our money back, but not all of it. If we look at just this position here, the IV rank has actually increased. And you can see that because we haven't rolled this position, but we're still showing a negative here. Here in, you know, past the weekend, though, things are going to start to look a little better. We'll only be down 40 bucks, and a rally would put us in a decent spot. So, given that we put this trade on inside 21 days to go, I'm inclined to hold on to it. You know, if the market decides to actually hold on to the rally tomorrow, that would be great. I may choose to... I want to see if I could put another bearish trade on before the end of today. Just because I am so exposed to the upside. And the only bearish stuff I've got is the QQQ and the ARM. Everything else, you know, of course, bullish, and it will continue to be bullish. Oh, wow. SMCI, 19%. Holy crap. So this was my big mistake, and it's just plummeting. What is going on? Some people have got to be feeling that pain today for sure. Shopify. Whoa. Yeah, Shopify got all the way down to 48, and now is it 64? Yeah. Some of this stuff is crazy. CrowdStrike really wasn't that insane. I mean, if you were already struggling from this down move here, you were still struggling from it. So, I can give you just 1 second. Actually go into the Tasty Trade research segment now because I want to revisit a segment about profit targets for... Yeah, so... yeah, so this Tasty Trade research segment here, and I'll actually link this here in the chat. Rules of thumb on when to take profits. I use this all the time because the profit velocity is actually incumbent upon, you know, when it would be okay to take profits off. And in the case of short calls, if you get 20% of your profit within 2 days, that is, in theory, acceptable. To take off, right? So, I mean, I can just do the math. 33, that'd be $66. And given that we're at 92, we're almost at 30%. Not quite, because that'd be 99, as you can see here. But yeah, I'm more than happy to hold on to this guy because he's the only bearish lifeline we have right now. It's just by the grace of God that some of these other stocks that I have are actually bullish on the day. The Q not down too much, so Coinbase, wow, just continuing to plummet. This is a bearish engulfing candle, and you can see it because it totally engulfs the other candle here. So maybe some bearish action in Coinbase headed for the horizon. This might be an interesting time for a diagonal spread because you can see the 44-day cycle is pricing in $37 of movement, and 17 of that is slated to happen in the next 9 days. So, and half of 38 is 19, so almost half of that movement is going to happen in a fraction of the time. So I am very much interested in a diagonal spread to the downside here, I think. I've played coin to the upside these last few days, and I will buy the... I just want to see what it's like. This is all I do. I just go and I just hunt for opportunities that I think might be good, right? They may totally fail, but I think that's totally fine. So, let's take a look. If we buy the 180, that's 19. That's almost 20 bucks. Damn, that's a $2,000 deal there. Okay, yeah, so this is probably going to end up being too big. We might be able to... Now, the thing is, this may actually work, though, because 9 days from now, if that 170 is worthless, we can kick him out in time for how much? Let's say we buy this and sell the 44 170. 890. Wow. Okay, now we're not going to get the full 890 because 9 days from now that will be somewhat decayed. But that looks like a decent trade. It's a little big. Let me see if I can prune it down a little bit. 190, 170. Whoops. That would be the opposite of what we wanted. So, of course, we want to buy the longer month, sell the shorter term expiration. Maybe, yeah, 170. So that's 1920. Bet you we can get that down to lower than that. Now, at a $65,000 account, wow, 98% P50. Holy crap. Now, maybe that's 20 short deltas. Maybe we can get it lower than that. So maybe we can do 180. Whoops. We want to buy the 180 here and sell. That's better cost-wise, and we have less delta, but we're actually paying more than the width of the spread, which we don't want to do. Let's actually take a moment to observe the skew dynamics too. So $10 out of the money on from 180 to 170 is $5 to $6. $10 to the upside, also, you know, 5 to 6. So the skew is just about even here, which is also interesting. Usually coin is skewed to the upside. We're actually slightly skewed to the downside here, I think. So see if we can tap into that at all. 918. I mean, yeah, dude, what if we sell the 175 and buy... Can we go into maybe some of these weeklies here? We don't want to buy volatility if we can help it. So 85 is actually the lowest vol there is. So maybe we go into the 85. 175, 185. Yeah, we're still overpaying. So maybe we kick this out to 9 days. We're still overpaying. 195. Alternatively, you know, we could just do what I've been doing, which is just selling these crazy out of the money puts. See if I can get this 200-day moving average on the chart again. About 99. Why can we not? Okay. 100 shows up. 150 is way down there. 160, 170, 180, 190, 200. Yeah, 200 just like disappear. 200 just like breaks this thing. I'm trying to get 200 to show up. Can we do 199? Can we do 190? Yeah, this is kind of scuffed. So 192. Oh, maybe that's why, because there aren't 200 days in the year. Yeah, I'll keep messing around with it. Weird. Yeah, I want to try to make something work on coin. Can we sell the 110? $2,200 in buying power for 173 credits. Ivy rank of 65. And we'll add Ivy rank as well. Yeah, so coin Ivy rank, of course, just plummeting. Let's see. So the 170-day SMA. Wonder why that's NA. Maybe because there's not 200 days in the year yet. Don't know. In any case, yeah, this sell-off is really picking up steam here. Upstart. God, do you remember when that was like a $200 stock? Just crunch this way down and back it up. I remember there being a massive thing with Upstart. I'm on the 6-month chart with the 12-hour candles. No. Okay, yeah, now there's a 200 SMA, so maybe my chart settings were all messed up. Okay, yeah, so the SMA here is 168. So if we close that, we close beneath that, which we might. We didn't close beneath it here. We didn't close beneath it here. It looks like we're gonna close beneath it here. So yeah, maybe there is more pain involved. Let's see. I really want to try a diagonal, but I just don't know that it's in the cards. 24. I don't know. Maybe we can like buy the 72, sell the 44 day to go option. Okay, so that's $15 for 12. It's 25 for 16, so it's getting better. Yeah, that's a 19 for 35, but we get possibly 70%. That's just a lot, though. Wonder if we can maybe do the... Maybe we can do the 185, 150... 185... 150. Okay, for 16, so that's max of 35, and we're risking a little less than 2%. I think, though, that... Man, and the November cycle's got the election volatility baked into it. 84. Really want to try to buy the least volatility possible and sell the highest. So maybe 185, 150 here. Yeah, that's pretty steep. Pretty steep at 18, but you know, we give ourselves Do give ourselves some time. I still think that's a little too big. Diagonals, huh? I like vertical spreads, but they're just a little... Oh, shit. Wasn't even capturing the window. Making all the rookie mistakes here, I think. Shit, I'll probably delete all this. And we'll start over. You know, it's all good. Let's see. This is where a second monitor would probably be good. Yeah, I think coin is definitely going to close below its 200 EMA. So I'm looking for a bearish trade here if I can find it. I don't want to... I mean, maybe I just sell... Okay, that looks a little bit more promising. The 210, 220 for 217. It's not quite 1/3 the width of the strikes, though. Again, the risk seems to be to the downside. We're just at about 180, so $10, 14... It's 15. No, so according to this, the skew is actually to the upside some. But that's 44 days. And we go to 9 days, we get $10 out and $10 out. The risk is to the downside. So the risk is temporarily to the downside. So we will actually maybe capitalize on that fear slightly. We'll sell the 30 delta. We'll sell this 165 and we'll offset that with the 180 cost. So this looks a little more reasonable. This is a trade that's $8 and maybe we actually give ourselves a little more time. So that's $15 and we've got the 180 put. It's in the money, $3. It's got a 99.5% P50 and it's a $15 wide spread. That's 20 wide, but it's 3%. So that's 3% of the account, which is for a defined risk not insignificant. So we'd be risking 18 to make 20. That risk reward doesn't seem great either. But remember, we can roll this 165 out. You know, if we buy this 165 and sell the 165 in the 45-day cycle, that's another 840 we're shaving. Now in 9 days, that's obviously going to have lost some value, but just imagine about $5 of rolled value coming back to us. So our max loss on this trade really isn't as bad as it seems. 185, 165. Yeah. I mean, that's pretty steep. Typically don't want our diagonals to be worse than 75% of the width, so we would only really want to pay 15 here for this to be good. Okay, what if we gave ourselves less time? What if we went to the 185 here? That's a little more reasonable. So $17 to make 20. Yeah, we still want to be closer to 16. That still doesn't feel great. But we can probably get our cost basis down to 16. Just want to know what the sell-off is from. So we've got the bearish engulf. We're going to close below the 200 EMA. Let's do it. You know, we made some QQQ profit. I don't think we're forcing this. We've got a 96% chance of P50. We have some directional bias here. We have some intrinsic value working for us. Positive theta in the short term. So let's take a look at what's going to happen if we are incorrect. So, yeah, the theta is actually going to work for us, and we'll be able to kick a profit. So barring a rally in Coinbase, we'll be fine. We'll go ahead and execute this. It's a bigger trade. Wow, and I got filled immediately. That always scares me. Whenever I get filled right away, that's never good. Okay, so yeah, with that giant move in Coinbase, we'll go ahead and see if the sharks bite. That could be Bitcoin related, but you know, we're seeing a massive, you know, what looks to me like a bearish engulf. We've got opening and closing prices that completely ensconce the opening and closing prices of the previous day. This also gives us some additional bearish deltas, and I mean, right now we could roll this guy out for another $6. So, you know, that's, to me, not terrible, right? Because we can roll this out for another 37 days to go, actually 706. So, you know, if this goes against us, we're still going to be able to pick up almost enough to where we're risking basically $900 to make 20, which would be really great, actually. And I may even execute that roll now. You know, sure, I could probably size down less. We're not exactly going to make the full 7 here in about 9 days, but I think that's all right. I think with this massive downward move in coin, we have a couple technicals going our way. We'll see what happens. That's obviously a large trade. It's a high IV trade that has a short premium component, and we're going to capitalize on more short premium even when we roll that out in time. So I'm just curious, yeah, so this has a 55% P50, but selling this 475, or the 165 there rather, excuse me, will make things interesting. So yeah, like I said, a little larger than I'd usually go, but we're gonna have positive theta here for the next couple days. So this is what's so great about options, right? Like, if we just back this up. So right now, here's where we are. We're at like minus 100. IV rank increases. Let's say 5%. That actually, the increase in IV rank would be good for us. If IV rank decreases, that's not good for us. IV rank will probably mean revert, but if we're right from the bearish perspective, we may get an increase in IV rank here. So we'll see what happens. Diagonals aren't ideal in high IV rank. You know, I'd probably want to do short premium. If we are really crafty, we can finance this diagonal with something to the upside, maybe. I don't want to buy more premium to the upside, but I may sell something. 1/3 with the strikes. Yeah, I don't think we're collecting enough. You know, 225. We're risking basically 8 to make 2 and a quarter. Doesn't seem great. Let's kick this down. Yeah, to be bearish here and sell to the upside doesn't seem ideal, but we'll see. We're already down 125, which is interesting. Let's check and see what Bitcoin is at. BTC. Or we can just go. Yeah, I mean, Bitcoin is down 4%. So we'll see. I am glad to get some bearish deltas in the portfolio. Like I said, this trade is a little large. It's on the larger side of defined risk. I don't usually do defined risk with $17, but we can still make something good happen here, and we do have, like I said, that positive theta working for us in the interim. So, you know, come Monday morning, if there's a chance to close this guy out, 29. Yeah, so, you know, next Friday, there's a chance to close this guy out for $100. I'll happily take it. So we'll see. Coin can stay where it is, can even rally slightly, and, you know, if it keeps its IV rank, it can rally to 181, and we'll still be in decent shape. So even with all that bearish delta, we can get something going here. Well, shit, $27. I may just scalp that. We may just leave. But I think, I don't think the technicals are looking bad. We are going to close below the 200 EMA, which is, or 200 SMA rather, simple moving average. So that's something to be aware of. And we got the bearish engulf. So we'll see what happens. If we get rallies across the board tomorrow, I think the portfolio is going to be in relatively good shape, all said and done. But yeah, looks like we're ending the day up slightly. And I will see you guys tomorrow for the market open. Peace. Yeah, like I said, a little larger. Us some additional bearish deltas. And I mean, right now we could roll this guy out for another $6. So, you know, that's to me not terrible, right? Because we could roll this out for another 37 days to go, actually 706. So, you know, if this goes against us, we're still going to be able to pick up almost enough to where we're risking basically $900 to make 20, which would be really great, actually. And I may even execute that now. You know, sure, I could probably size down less. We're not exactly going to make the full 7 here in about 9 days, but I think that's all right.